QuickBooks Pro Desktop 2021 Set Up Inventory Items. Let's get into it with Intuit's QuickBooks Pro Desktop 2021. Here we are in our Get Great Guitars practice problem. We currently have the open windows open. You can open the open windows by going to the View dropdown and selecting the Open Windows list. We're going to be entering the items for inventory items. We entered service items in a prior presentation. Remember that as we enter the inventory items, we can use them to populate both the purchasing half of the inventory, including the purchase orders or the bills that we will be using, and the invoices or sales receipts on the sales side of things when we are making the sales of these inventory items. So to do that, we're going to go to the items. Now remember, you can go to the items list by one way you can get there is go to the items and services on the home page. I typically like to go to the drop down. Remember the terminology that will be here if you use QuickBooks. It's not necessarily accounting terminology. The items and services, items are going to be a kind of QuickBooks terminology, not necessarily accounting in general terminology that's going to refer to, for example, these inventory and service items that we're going to use to populate and fill in the invoices. Also note the terms lists will have a certain context within QuickBooks that it doesn't typically have in accounting, which is going to be, this drop down key. This is where the lists were found, including the items list. So particularly people that use the desktop version, you will hear that terminology. Types of lists, it's the types of lists, and the types of lists is the items list here. And these are going to be these items that we're going to use to populate the invoice. Now we have our information up top and we see this stuff is going to be the service items. Now we're going to be adding inventory items. I'm going to close this window up so we have a little bit more space to do so. Notice we have the items drop down. So we have the drop downs down below, which are really rise ups. So we got the items drop down, but really it's a rise up. If we click on it, we can enter one item at a time. We're using the same data input screen as we would with the service item, but we'll be picking another, the inventory item as opposed to the service item. We want to enter multiple items at a time, so we're going to go back to the add and edit multiple items. Notice that you can add items like as you go, on the fly, as they say, when you're just entering invoices. You can enter items as you go, but if we're entering multiple items at one time, this is the place to be. If you're adjusting items, this is the place to go. We will have examples of adding invoices as we go in future presentations when we enter data. So now we're going to hit the drop down. We don't want the service items this time. We want inventory parts. So we're going to say inventory parts. So that's the one we want. And that's going to have a few more fields on the default, including now the cost, right? We need the cost and the sales price. So there's going to be a lot more data here. Notice we've got the scroll screen on the bottom because we're going to have to scroll to get through this information. Once again, we want to line this up as easy as possible to make the data input as easy as possible. If you have a list of items that you have set up already in, like our list here, we will provide this worksheet. You can then use this worksheet to do the data input into the system, but we need to be lining up the proper locations to make that data input as easy as possible, and or we can copy and paste the information from here to QuickBooks, making sure, however, before we do so, that we have this lined up in the easiest way possible. Now note that as we do this, there's two things that are going to happen. One, we're going to have the information that's going to be put into the system just as an item so that we can then use them to make our purchase order and our sales receipts and whatnot. Now, if we were just starting from scratch and we had no inventory items on hand, we were just entering the items that we were going to later purchase, then we would have nothing here in terms of the quantity on hand, and we would be okay, and then we could just purchase items from that point forward. However, if there are some things that are already in the system, we already have some inventory on hand and we're trying to put them into the books, then we're going to have to record that inventory item on hand at this point so that we can record it, and QuickBooks will make a journal entry for it. In other words, if I look at the trial balance, our beginning balances, we're going to assume we already have some inventory, and that inventory is going to be this 2008.96. So I can't just enter this into the QuickBooks system as our beginning balance as one lump sum. If I want to track the inventory in the system, I have to enter the units into the system, which we will do now, and then tell us how many units we have so that it can then support this number with the backup. So that's what's going to happen when we enter these items, because we're going to enter the beginning balance here, and then QuickBooks will dump the other side into opening balance equity, which we will adjust at a later point in time. So if I go back on over, in other words, we could see here that we have, these are the costs of the units, These are the units that we have on hand, the number of them. If I multiply them out, you don't have to do this, but I'm just going to show you if I multiply the cost times the unit, not the sales price, but the cost, and I copy that down, and I was to add this up, summing this up, then we will then get to that 2008.96, the 2008.96 we saw that's going to be on the trial balance. That's what we expect to see on the trial balance or the balance sheet after we enter this data, given the fact that we're telling QuickBooks that we already have these units on hand at this point in time. All right, so let's just review this. It's a little bit more detailed now. So we're going to have the item name, which is going to be like an abbreviated name here. Then we're going to have the sales description. We're going to be selling guitars. So we have Epiphones, Gibson, and a ukulele that we'll sell. And these are just, kind of mock names on what we're going to sell. And then we have the purchase description. So we have the sales description because that's what's going to show up on the invoice and the sales receipt. The purchase description is what's going to show up on the purchase order or the bill. And then we have the cost. This is what we purchased them for. This is what they're going to go on the books on inventory for when inventory goes up, when we purchase the inventory. And it's also what the cost of goods sold is going to be recorded at when we sell the inventory. The sales price, which should be not the sales price, but the sales price should be, that's going to be what the cost is per unit when we sell the inventory. Then the cost of goods sold account, this is the account that will be recorded when we make the sale using a invoice or a sales receipt. The income account, this is going to be the account on the income statement recorded when we record the sales receipt or invoice. And then the asset account is going to be the account that will be recorded when we purchase the inventory, and it'll decrease when we sell the inventory. The quantity on hand is going to be the number of units we currently have at this point in time. We're going to enter the quantity on hand as of 12/31/20. That's the day before the time period that we're going to start using our QuickBooks system, which is going to be the year of 2021, starting January 1st, 2021. So here's going to be our data input that we want to put into the QuickBooks system. Now you could do this by lining it up side by side. I need to line up the headers. So what I'm going to do is go back on over here and I'm going to say, all right, these headers, I want to line them up to be exactly lined up to the headers that I have in my Excel worksheet. And that'll make the data input as easy as possible, especially considering this is a long worksheet. So I'm going to go up top and say customize. And we have the options on the left, options on the right. We can add, remove them, bring them up or down. This is a vertical display of what will be then displayed horizontally left to right here, top to bottom here. So I'm just going to list this out in accordance with our worksheet. So we got the item name, sales description, purchase description. So I'm going to say, all right, so item name, and then I want the sales description, which is over here. So I'm going to add it, and then I'm going to move it up. I'm going to move it up to be right under the name. So item name, sales description, then the purchase description, which is over here. So I'm going to move it over. I'm going to add it, and then I'm going to move it up. I'm going to move it up. And we're going to say purchase description. And I'm going to remove some of the stuff here. I'm going to remove the stuff just so I can add them as I go. Let's just remove everything. I'll just add this stuff. I can't remove. They won't let me remove that one. That's an important one, or that one. These are required fields. They're telling me remove and remove and remove. Sales tax, remove and quantity on hand. So I'm going to remove it for now and then add them as we go. And so if you have slightly different names in your worksheet than are in Excel, then we'll line up the appropriate name. Cost and then sales price. So I'm looking for cost. So add that. And I'm going to move that up to after the purchase description, sales price. I'm going to add that. I'm going to move it up after the cost. And then we had the cost, sales price, cost of goods sold, and then income account. So, all right, cost of goods sold we already had here. And then the income account. So those are good. And then we have the income asset account, quantity on hand, and date. All right, so I'm going to go, okay, asset account here, that looks good. Quantity on hand, that's going to be this one, how many we currently have. And then the as of date, we're going to add that. So those are the items we need. Now, we don't have the sub item. We're not going to use that full item name. Not going to have that manufacturer part number. So if you have a manufacturer part that you want to have it at the unit number, you can put that. The preferred vendor, that might be useful. You know, we could add that because we have 3 vendors we're thinking about, but we're not going to add it yet. We got the sales tax code. We should probably add that, but I'm not going to add it now because I'm going to say if I want to copy and paste from this item over, I don't have it there yet. So I'm going to copy and paste it and then go back and add the sales tax because I do want it there, but I don't want to add it because it's not on my Excel worksheet. And then we can have the reorder point. So it might tell, that will say, that's a point that we might say, hey, if I get down to like 1 unit or something like that, I want you to tell me to reorder at that point in time. So we could add that, but I won't do it here. The total value, we could add total value. I'm not going to do that because it's going to calculate the total value, inactive, average cost, and then the max. So I'm going to leave those as is. I'm going to say, okay, it'll reformat these in alignment with this vertical format here. Say okay. So there we have it. Now there's 2 ways we can input this. I'll do some of the data input just to show you how to do the data input. And then we can simply copy and paste this in if we have everything lined up properly. So just take a look at the data input. I'll move this to the right. If you have 2 screens, the data input is a whole lot easier to do. So I'm going to move this to my other screen over here. And then we can just populate this. Now remember, you can adjust these cells kind of like you would in Excel, like putting your cursor between these line items and then adjusting them. So I'm going to use just the tab feature to tab through this for a couple of them, and then we'll copy and paste. So I'm going to say ELP, and this would be tab, Epiphone, Les Paul, tab, and then it's going to be the same thing. So you could copy this, Epiphone, Les Paul, Control C, tab, and then Control V, and then I'm going to say that's going to be 400. Then the sales price is going to be 500, so we're going to sell it for 500. Cost of goods sold, that default account is going to be there. This is coming from the chart of accounts. So the chart of accounts, cost of goods sold, type of account, that's a type of expense account that will only be there if we sell merchandise item. The income account is going to be a sales account. So if I hit the drop down, we have sales. Notice we have 2 different sales items here. We have the service items as an income account. The sales item, everything that we sell that is inventory, I'm going to put into sales. You could change the name by going to the chart of accounts if you want to call it merchandise sales or guitar sales or something like that. But I'm going to say sales is the sales of inventory. Service is going to be our income related to service items. Inventory account, that's going to be our balance sheet account. It's selected for us. That's our only inventory account. You could have multiple different inventory accounts. We're going to group all of our inventory into the one inventory account and then have the subledger account, which will be tracking the inventory. The quantity on hand for this one is going to be 1. So we're going to say 1 on hand. And then as of 12/31/20. So notice I'm typing in just as easy as possible, 12/31/20, and it'll then populate the format for us. So that would be the data input. I'll do like 2 more, and then we'll go into just copying and pasting it over. So the next one, the abbreviated name is EPSP. This may often be a number or something like that to make it easier to pull up. This is going to be another Epiphone, but it's a Standard Pro. So then I can copy that because the sales description will show up on the sales receipts and invoice. Purchase description on PO or the bill, purchase order or the bill. Cost $480, that's what we buy them for. We sell them for $600. Cost of goods sold is going to be the income statement account when we sell the inventory. The sales account, that's going to be the income account. When we sell the inventory, it's going to be recorded on an invoice or sales receipt. The asset account is going to be the balance sheet account. That's going to be recorded when we purchase inventory and recorded when we sell the inventory, decreased when we sell the inventory. The number that we have on hand here is going to be 1. So we got 1 on hand. And it's going to be 12/31/20. All right, so now let's go ahead and just copy and paste this over now. Instead of inputting the rest of them in, I'm just going to pull this over. Now that I see that everything is lined up the way it should be, I'm going to say, let me just copy this whole thing and see if I can paste it over the top of what I already input. I'm going to copy this whole thing and see if that lets me paste it over the top or if it duplicates anything here. So that looks good. So we've got the Epiphone, so everything lined up here. So I just copied and pasted it in 1, 2, 3, 4, 5, 6 items. 1, 2, 3, 4, 5, 6 items here. So now we've got everything lined up. So now what I'd like to do is add that sales tax tab that wasn't here. So I copied and pasted exactly what was in the Excel sheet. Now if I want to make any adjustments, I'm gonna do them at this point. So I'm gonna say, all right, let's customize it now. And I'd like to say of these items, sales tax, I could add the vendor, but let's just do the sales tax. I'm gonna add that in and I'm gonna say okay. And then by default, these are all taxable items. So when we create the sales receipt, we're going to say these are taxable because we're selling inventory items. I'm going to say for our purposes that the inventory items are going to be taxable for sales tax. We're going to charge our customer sales tax, in other words. The service items will not be taxable for the sales tax, as we saw last time, and therefore the service items would have these ones have the tax. Let's go ahead and see if we can save that now. It says 6 items recorded have been saved, so that's great. So we're going to say great. Then it should pull us back over, or I'm going to close it out now. I'm going to close it out. And here is our page, which was our list, which again is at the lists drop down, and we're in the item list. And so now you can see we have our normal items up top, the hourly items, or not the hourly, the service items, and the inventory items down below. If we wanted to adjust any of them, we can double click on any of the items, pull them up, and then there's our information. So notice this is a little bit more extensive of a data input screen, but it's the same thing that we input it on a linear basis, right? So we have the item, then we have the sub item, the manufacturer part number. We didn't have anything there. The cost is going to be 400. The cost of goods sold is the account that will be entered when we purchase the item. I'm sorry, the cost of goods sold will be there when we sell the item. That's going to be the expense account. We didn't have a preferred vendor. We could add it. It would be the Epiphone here. And then the description on the sales, that's going to be the sales description. On the purchase, on the sales receipt or the invoice, the sales price 500. Tax means it's taxable. Income account, that's going to be the account that will be impacted when we create an invoice or sales receipt. Asset account, that's going to be the balance sheet account that will increase when we make a bill or we purchase. And then the reorder point, we didn't put a reorder point. We have one on hand for the 400. So let's close this out. If you had any problems updating using that feature, then you could enter them one at a time by hitting the items drop down, rise up, and then go to the new item up top. And you can then select, just make sure you select the inventory part. And then you'll see this data input screen. You can enter it in this format. It looks a little bit different, but you can see they line up in the same way. And then just hit next. And you can enter these items one at a time. So let's close this out. I'm going to say no. And then I'm going to open up the window on the left-hand side. And let's go back to our home. So back home now. Now, that will affect 2 different things. We can make purchase orders. For example, if I enter a purchase order here, we're going to have the inventory parts. I'm going to close this window to the right. Now, this would be a request. We'll talk about purchase orders later, but we're requesting the purchase of an inventory part. You can see if we hit the drop down, there's our inventory parts that'll help us to populate the purchase order. Closing this back out. We may also enter a bill or a check. So let's just take a look at a bill, which we might just use a bill to be recording the inventory. There's 2 tabs down here. One's the expenses tab. If we're purchasing inventory, we use the items tab, where once again we see our drop down and we see our inventory items. The bill then would increase the asset account of the inventory that we would purchase. Closing this back out. We also see that when we create a invoice or sales receipt on the sales side of things, that we will then see the items now. Items, once again, here's our items. Now, when we choose an item here, note that it shows the sales price, and it doesn't show the inventory. And we should have the sales tax populating. So we'll take a look at the sales tax more next time, but let's just think about this in general. If you got the invoice, the invoice then is going to be doing a little bit more now, but we only see the sales side of things. So the sales side of things would be increasing the sales, increasing the accounts receivable. The cost of goods sold would also be affected because we're using the perpetual inventory system, even though the cost isn't on the invoice, because we don't want to give it to the customer. We don't want it actually on the invoice, but the invoice drives the other side of the journal entry, which is the recording of the cost of goods sold, which would be the expense side of things. And then it would also record the decrease in the inventory. And if we had tax on it, which we'll add the tax, then that would be included here as well. Closing this back out, and I'm going to say no. Let's take a look at the financial statements, because we expect on the balance sheet now for us to see the inventory should have been increased or included. So let's go to our reports drop down up top. I'm going to go to the company and financial and scroll on down to the balance sheet standard. We're going to go here a lot. So balance sheet standard, opening up the standard balance sheet. Let's change the dates to 12/31/20. So that's the end of the last period. Notice it increased the inventory by that 2,896, which is what we expected to happen. That's what's on our beginning balance worksheet. Where did QuickBooks put the other side? It put the other side into opening balance equity. Is that correct? Not really, but QuickBooks is basically making up an account telling us that's what we did. Once we put the beginning balance for every other account in place, this opening balance equity will be in the wrong equity account, but correct in terms of the total equity balance. And then we can adjust the equity account to the proper account, whatever we want it to be. If I want to drill down on this, I can drill down on this data. And then I could say, let's drill down on this data, any one of these items. So these are all the items that we just entered. And then we're going to get to our inventory part. Notice it's not taking us directly to the data input screen we had, because that's the data input screen. It uses this form to record the inventory that we had. So we have 3 of these on hand, the Gibson USA. Closing this back out, closing this back out. Now this number needs to be supported as well by a sub account, which tells us not just the dollar amount, but the units that we have on hand. That's what will be tracked in QuickBooks when we use this perpetual inventory system. So I'm going to hit the reports drop down. We want to take a look at the inventory, and let's take a look at the inventory valuation summary report. So if I take a look at that, and I take a look at it as of 12/31/20. So here's our amounts on hand, the average cost, which we only had one cost, that's going to be average, the asset value that we have on hand, the total assets, the sales price, and the retail value. This is going to be the amount that we are selling them for. So notice on here, for example, the Gibson, we have cost 304 and we have 3 of them. So that's a total of the 912. The bottom line here of the cost, not the retail price. This isn't what they're on the books for. That's what we expect to sell them for, but they're on the books for the value that we purchased them for. So that's going to be the 2,896. We don't realize the rest, the difference, until we sell it, till we do what we do to earn the difference, which is to actually sell the inventory. So this 2,896 is then what was on, if we go to the open windows, the balance sheet, the 2,896 now being supported with the subledger. Now also just note that we entered this as a 12/31/20, the end of the last day before the new period. So that when we go to the new period, because this is a balance sheet item, if there was any problem with QuickBooks, like recording this to an income statement account or something like that, as we record the beginning balances, which could happen in some of our data input, it will then roll into equity anyways. So that will give us a double assurance that we're not kind of messing up the temporary accounts, the inventory accounts. So if I move this up to the next period, January, then we see the same balances here, and there'll be no impact on the income statement. That's our timing accounts, and our beginning balances look correct so far, and we'll just continue on with this process as we move forward. This is kind of the most complicated component to enter these inventory items, but then we'll enter the rest of our beginning balance in a similar kind of fashion. And at the end of that process, our equity section will be right in total, wrong in accounts that are actually used. And then we can do like a little adjustment to just put the equity sections into the proper accounts.